What's going on, traders? Welcome to Investing Trends, where we talk about the latest news and trades on trending stocks. In this video, we're going to talk about cannabis sector, aka weed stocks. With the election out of the way and Joe Biden being the president-elect, there's a new era forming, a new investing environment where I expect weed stocks dusting off and coming out on top. The trend is that Americans of all parties strongly support legalizing cannabis. States such as Alaska, Arizona, California, and Colorado have already legalized weed, and more states are becoming mixed about the concept and being positive about the idea of legalizing it. But the major catalyst, the one that breaks the camel's back, is the federal legalization. If weed becomes legalized on the federal level, then weed stocks are definitely going to moon. Now, what are the chances of that happening? That is the question. I think the chances are better than ever with Joe Biden becoming president and America under Democratic federal government. It sure isn't going to happen overnight. It's going to take a long time, maybe the entire 4 years of Biden's term. There are three key cannabis players, and they are Tilray, Aurora, and Canopy Growth. I know that some of you are naysayers, that these companies are bleeding money and that their financials are horrible. That is true. But this is not a financial play, but a sector and regulatory play. If these stocks had a strong balance sheet and profitable, then they wouldn't be trading this low. That being said, let's take a quick look at the three stocks mentioned and dive deeper into Aurora's technical chart and trading strategy. If you like these type of videos, make sure to subscribe to my YouTube channel right now. That way, you don't miss out on more actionable videos like this one. Just click on the subscribe button below this video. The weed sector as a whole is likely to benefit from this, so all the stocks, Tilray, Aurora, Canopy, are expected to go up. You may feel strongly about one than the other, but I picked Aurora for the following two simple reasons: market cap and volume. Tilray has a market cap of $1.3 billion with a volume of 51 million. Aurora has a market cap of $1.8 billion with a volume of 163 million. Canopy's market cap is approximately $9 billion with a volume of 17 million. Comparing these three, Aurora's market cap is healthy by not being the lowest, but with a huge upside potential to reach as high as its competitor Canopy, which has a market cap of $9 billion. Not only is there a strong market cap upside potential, but the volume is super healthy, reaching over 100 million average trading volume, so the liquidity is there. There are definitely other weed stocks out there besides these three, and of course other reasons for picking ACB, so feel free to dig in and choose the one that fits your preference. A lot of you are probably wondering if weed stocks went up a lot and missed the boat. Is $12 a share a good price to get in? Is ACB overstretched? Look, I know that ACB went up a lot already. Over the past week, it went up over 170%. It is not too late. This is just getting started. Look at the price history. This stock's all-time high was $150.30 back in October 2017. And it has been grinding lower and lower to the lows of $3.71 on October 26, 2020. It is currently trading at $12 per share. Can the stock go down to $3 per share again? Of course it can. Can the company go bankrupt? Sure it can. But what are the chances? The chances are low in my books given the new environment we talked about earlier. While the chances to go down is low, the probability it will rise and that it will go up is much greater. And that is where I see the low risk and high reward strategy come together. So how to trade ACB? This is a long-term investment strategy, so my weapon of choice are shares or leap options. Advanced traders, you should know what leap options are. There are multiple ways to invest here, so find the one that you like. You should be able to sleep at night not worrying about ACB, so if you find yourself losing sleep and constantly worrying about it, you are overexposed. So here's a simple trading strategy that you can implement. Allocate a percentage of your total investable assets to ACB. I recommend at least 10% of your portfolio size. So if you have $100,000 available to trade, then you dedicate to invest $10,000 to ACB and nothing more. We will call this $10,000 allocated amount. So with that 10,000 bucks, you go all in and buy $10,000 worth of ACB tomorrow, right? Wrong. A lot of folks do this and find themselves in a jam. What you have to do is take 60% of that $10,000, which is $6,000, and buy ACB tomorrow. Now this is your cost basis. Then you spread the remaining $4,000 investing in ACB every 2 weeks regardless of what the price does. This is essential to spread the risk as it is going to be very volatile. You may miss out on the max gains from going all in at once, but I'd rather take a bit less profit and lower my risk. ACB and other cannabis stocks are still very early stage in getting ramped up and gaining momentum, where a lot of day traders and paper hand investors are coming in and shaking up the price. You will see a lot of whipsaw action and volatility in the sector. So you may ask, what if it goes down lower after I spent the entire $10,000? If it goes lower, do not buy more shares. Your 10% allocation is your limit, and chasing the stock down will break that rule and lead to disaster. If the price of ACB hits your stop loss, then just take the loss. But look, the price history suggests that there are a lot of buying at $7.50, and the buyers at these levels are the hedge funds and the algos, not individual investors. Therefore, there will be a lot of support at $7.50, and I don't even think we will see that price level ever again. I really hope it goes down and moves lower, since it would be great to buy it that low, but I say the chances of seeing $8 is slim. My stop loss on this trade is $5.90, so my max loss is around 50%, but my upside is much bigger. My price target for ACB is $65 per share. Again, the all-time high is $150, and that is where I will take my partial. Partial means that I will sell 50% of my shares at $65 per share and let the rest ride. When the price reaches $65, I will increase my stop loss level to $50 per share. So the upside potential just to my partial level at $65 per share is 6 times the current price, while the downside potential is only 0.5 times. I do think that there is a chance that ACB hits its all-time high of $150 per share. And if that happens, this is easily a 10 times return on my investment, a 10x return. No doubt there will be a lot of volatility and huge swings along the way. That is the essence of owning shares or leaps. You just hold on tight and let the time pass by. ACB may go crazy and go up within the next 6 months. If so, great. But this is a long-term investing strategy where you will probably have to wait 2 years or more. Again, the price target is $65, so there's a lot of room to go up. If you find yourself seeing ACB going up to $15, $20, $40, $50, obviously the risk to reward goes down as the price goes up, so have this awareness and act accordingly. Keep in mind that my partial price target is $65, yet I am very bullish on this sector, where I think beating the all-time high of $150 is possible. That's it for this video. I hope this was helpful for your long-term investing and hopes to reach financial freedom. Please invest safely, subscribe to the channel, and hit that like button. I thank you, appreciate you, and see you next time.